Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 25th, 2012. Lots to talk about, so let's get started. Alright, so if I seem a little groggy in this video, I do apologize. I just actually woke up about an hour ago, so hopefully my brain functions. So I kind of wrote things down. Hopefully I won't jabber too much like I normally do in my videos, and hopefully I go in order of how I wanted to make this today's video. Obviously, I'm not going to talk about stocks today because this is going to be a market analysis. I'm going to talk about stocks later this weekend if I can find anything. Right now, it's very hard to find any stocks simply because, well, there's just no volume in the markets right now. So shorting any kind of stocks just would be, premature in my opinion. Now I'm going to give you an example of what I'm talking about volume, because I always talk to you guys about volume, and this is going to be another very good example of why we need to see volume in the markets, and why I watch other analysis saying the markets are going to start falling, blah blah blah, everybody goes short, this and that, and I'm over here thinking to myself, no, I mean, even if it could fall, there's just not enough volume there for me to justify any type of significant pullback. And sure enough, that's what we saw on Friday. But before we get into there, again, I'm just going to follow the list here of what I had planned to talk about today. And the first thing I wanted to talk about is the double top. We talked about the double top in the previous videos. One of the videos being patterns rhyme, patterns that rhyme. Okay, so this is essentially a pattern which is called a double top. And what a double top is, and I'm going to explain to you real quick what a double top is before I get into any detail of looking at previous patterns of double tops, and how sometimes they do actually play out and sometimes they actually fail. More than that, they are indicated as a pattern, so you're going to have the odds in your favor when you do see a double top pattern such as the one we see right here. And the reasons why double top patterns work, and the reasons why any type of pattern works, is simply because there's a psychological emotional effect based on traders out there, including institutional traders, that not require but make them emotionally sell their stock at a double top. And let me show you why. And this is the same for any other pattern, except this is what I'm about to explain. As far as the double top goes, the reasoning for the pullback of a double top is obviously going to be different from consolidation patterns, bull flags, bear flags, stuff like that, including engulfing patterns and whatnot. Every pattern has a psychological effect, reasoning of why it happens. It's not magic. I mean, a lot of people think that technical analysis is magic and therefore it won't work. There's a psychological reason behind it. We just use patterns to see it better and to identify it better. In any case, before I ramble on, again, like I said, I promise not to do. So in case you were a person who is trading the stock market, and say you started seeing the stock market go higher and higher and higher and higher, and this is the chart of the SPY, if I didn't mention that earlier, and it is the ETF that tracks the S&P 500. And again, the S&P 500 actually tracks 500 different stock companies, versus the Dow Jones is only 30, which is why most analysts use and do their analysis on the S&P 500. In any case, right around this area here, most likely we're going to have CNBC News and possibly Jim Cramer or people like that, people who the general population of traders, as far as retail traders, actually see. Now, what's really happening is there's bigger institutions, bigger banks or players or federal government or whoever the fact may be. They need to dump their stock off to people because they don't own 100 shares, 200 shares like maybe you and I would own. They own hundreds of thousands of shares, and obviously in order to sell you need a buyer, right? So simply put, as around this area everybody's saying to buy, buy, buy. So as the normal retail trader buys at this mark here, the market then just tanks because the institution starts selling off, right? That makes sense. All right, so as these days, I mean, we have day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. All right, that's 2 weeks already. these traders, they're obviously hurting, and they're losing a lot of money, and they don't like the fact that their hard-earned $50,000 that they save just to trade in the stock market thinking they can double it. They're crying because their wife is yelling at them, or husband, or whatever the fact may be. Maybe they got to put food on the table and they're unable to, or maybe they got to send their kids to school, but now they fear that they won't have money. And it's just the painstaking blood and sweat that you put into saving this money, only to see it being taken away from you by these institutions, right? And then we come a little bit higher, and they're already, in their second phase of their emotional standpoint, which is hope. So they're probably on their hands and knees praying to whoever they pray to, and just saying, you know what, just get me out break even, and I promise I won't trade the markets anymore, right? As it comes higher, it almost makes break even, right? Barely makes break even, and then she starts coming back down once again, and it's just coming down unbelievable. Now, for the inexperienced stock person, or I should say the inexperienced trader, they won't abide. They will not follow through with their stops. Okay, a lot of the professional traders, the advanced traders, like probably you who is watching this video now, you have to abide by your stops, and that's why that protects yourself. But most traders aren't traders that are that understand what even stops are. Okay, so as the stock is coming down, coming down, coming down, coming down, and this could be a trader that has a broker. I know a lot of traders personally that use brokers, and they listen to Jim Cramer, and brokers don't believe in stop outs. Okay, I mean, I wouldn't say that as a blanket comment. I should say that my broker that I used to have when I first started didn't believe in stops, and that's why I lost a lot of money. This was probably about 10 years ago, and this is why I started doing my own analysis, because if I want to lose, if I'm going to lose money, it's going to be my fault, not because somebody else had no idea what they were doing and then lost my money and had no effect on him simply because it wasn't his money. Anyways, off with the rant. We start coming back up, 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 and then whoever's invested over here is just saying, "Come on, get me out, break even." It reaches double top over here, which is the pattern. To trigger the break even, they're out of the markets, and that's why we have a sell off over here. Okay, so that's why double tops work, and this is right now a double top pattern. Now the question really is this top pattern gonna hold? All right, so before I get into the next phase of what I wanted to talk about, let's just kind of look at the weekly chart here. Unlike the daily chart where you had the pierce of a double top, on the weekly chart you don't get that pierce. On the weekly chart, this is literally a double top before we have this. Well, actually we did get this pierce here. We have this somewhat of a spinning top candle here, but if you look at the spinning top, which is normally a weak type single candle pattern reversal, we do get a little higher volume than the past 2 weeks, but you know me, my rule of thumb is that at least the past three volume candles. And the weekly chart is a little bit it does trump the daily chart. However, with the way things and the way things are today and the volatility that we have, weekly charts sometimes don't play out. As you can see, all these doji candles over here, some with higher volume than the previous days, and it still hasn't pulled back. So this is something that you have to be concerned about, or worried about, or something to be cautious about. That just because the weekly chart isn't a double top, it doesn't mean on the weekly we're actually going to pull back. There's definitely a possibility based on pattern alone, but it doesn't mean it's going to do that. So let's take a quick look at some history or historical double tops on the SPY for the weekly chart. Alright, so what I'm going to simply do is go back in time. Alright, so we have one here. We have a double top. It's very similar. I wanted to make it as similar as possible, where we have an up move on the weekly. We make a pivot point, we come down, and the length of the actual double top is similar to that of the length of the double top that we have today. So if you look at this length over there, length in time, and you look at the length in time over here, it's pretty much the same. It's not exact, but it's pretty much the same here. So this is a double top here that actually played out. Okay, whoops. Let me just delete this line here. And we had a significant drop towards the end of the year, and then we had a rally, and then we dropped again. Okay, that's pretty much what I'm thinking that may happen this year, but that remains obviously to be seen based on volume. We have another double top here after an extended move, right? We come down, it didn't last long, we come back up, and then we started pulling back already. Okay, so that's another double top on the weekly. There's a lot of other double tops down here, but I wanted to look for one or double tops that actually happen after an extended move higher. Again, this is around the month of August here, but this is July, and this is the year of 1998. So we come into a double top over here, and then guess what? We pulled back, and this is the one that I wanted you to see. Again, I don't glorify charts because I'm not asking you for your money. I know other analysts out there, they like to glorify it and say this is what's going to happen, blah blah blah. I'm more of a chess player, and I just want you to be aware of two different possibilities. The first possibility is what I think is going to happen, and the second one is what could happen and something that you should be aware of. Now, just because I think it's going to happen doesn't mean it's going to happen. I'm just going to tell you how I'm trading, and you know, you can make your own decision based on if you want to be bullish or bearish at that point. Right now, this is the negative side to a double top, whereas we have this down move, we have this pivot point over here. Obviously, we come down and we come back up, and then we go into a double top, very similar to today's one, not to this week's one, where we have this doji or spinning top type candle on a little bit higher volume, which was, you know, wasn't that significant. The following week we did drop, but we didn't drop lower than the low of that week there. We basically just consolidated sideways before actually heading higher, consolidating again, and then heading higher again. So keep in mind that just because it's a double top doesn't mean it doesn't mean it has to pull back. Okay, all it means is that it's a pattern, and there's a possibility that because it's a pattern, it could have a potential of pulling back. Now, one caveat to look at with this pattern here is, you see this candle here, this came pretty close. I mean, it's literally, if you were to draw this in a different way, and some analysts draw it this way, sometimes depending on the day I draw it this way, this already here, this down move, sideways, up move, this is literally it's a small double top, but it still is a double top before it pulled back. Now, because of this, as you guys all know, my use and abuse theory is, once the level has been used, it's no longer good. It's no longer as stable. Okay, but it didn't quite get there. If you actually took the tops, the actual top of this previous pivot, which means it's literally now on a technical level a double top, but this one did, just keep in mind, get pretty close. Okay, so again, if you wanted more information on pattern history and how pattern actually you know, they rhyme, they're not exactly the same, you know, I do have a video out there a few days ago on patterns that rhyme, and just take a quick look at that if you wanted to have a little bit more on a different pattern. Okay, or I think the pattern I talked about was this pattern over here, and I got some examples. So it looks like that both videos, including this one, there's a potential of it playing out. Just keep in mind the 20 moving average is right here, so even if we do pull back, unless we get that volume, we may actually just get a bounce right off that 20 moving average, even if we do pull back, which without the volume, I don't know if that's gonna happen. So which is the next thing on my list here. It says volume. Okay, so let's take a look at the volume. The volume on the weekly, again, it wasn't significantly higher. It's still lower than the average. I mean, we need to see volume at least above the average at very minimum in order for me to validate that this could be a reversal. Okay, I'm not saying again that it's not going to reverse. I'm just saying that the way I play is reversals have to have volume behind it, because from my analysis and my back test, even though a single candle pattern here can still reverse, it happens more often when there's volume that backs it. Okay, and even though it happens more often that way, obviously nothing is 100% guarantee, but I like it that the odds are in my favor because I don't like losing money. So unless I see volume with the reversal candle, then you know, it's not going to affect me anymore. Okay, so not affect me, but it's not going to cause me to make a trade, because I've learned time and time again that every time I break my rules, I lose money, and that's just the bottom line. And of course, it's just my rules, and which means it's my opinion, and that's all it is, which could mean nothing. In any case, other than the volume, as far as the candle pattern goes, we do have this spinning top, like could possibly be considered a doji. It depends on who you talk to. But the cool thing about this is also a harami pattern, a harami pattern. Let me just get my rectangle over here, and if you look at this, two candle pattern here, same like the engulfing pattern. We have this candle engulfing this candle's body here. That also indicates a two candle candle pattern as far as the reversal goes. So just keep that in mind. We don't have it on volume, so I just can't validate this as a potential reversal just yet. But again, when the volume starts coming back into the markets, then yeah, I can validate it as something as a potential reversal. So let's take a quick look at the SPY daily chart here. I don't know what happened. Give me 1 second. Alright, so we're back at the SPY daily. I'm gonna load my previous drawings here, which has my mathematical calculations and stuff. I just wanted to give you guys a quick look of previous analysis or recap. We have this rising wedge pattern. This is no longer a flag or a somewhat of a flag. This is just simply a rising wedge pattern. We talked about this not, whoops, let me just get rid of this. We talked about this not being a pivotal area here. What's happened is we kind of just floated up due to the low volume, and then we created this pivotal point here, and then we came down here. If you in the previous video, I did talk about that unless volume comes back in the market, we can't really trust this reversal, and I still stand by that, and that's why I also said in just the most recent video, I said because there's no volume, there's a potential that we can get a bounce off this 20 moving average. Just be aware that that can happen. That's exactly what happened. I mean, we just went right into the 20 moving average, which was, say, the 20 moving average was 140.33. The low of this candle was 140.22. So it's pretty much pretty close, and that's exactly what we did. We got a reversal, and this reversal on the daily chart is considered on a technical level a reversal candle pattern here, which is a bullish engulfing pattern, okay? Because as you guys know, 3 candles down at least to make a pivot. We got that already, 3 candles, which is 3 previous days down days, and then today we had that reversal candle here. But again, we just didn't get that volume. You see that volume was even lower, so that tells me that this, although it could go higher, it's not going to last long, okay? Or there's a potential that it won't last long. But again, like a chess player, you have to realize, in my opinion, that without that volume, it could go higher. I mean, you just never know. I mean, if we continue to have low volume, we could actually break out of this this wedge pattern here and continue higher. There's nothing telling me otherwise without the volume coming back in the market. Now here's the reason why I think that the volume could potentially stay low for a while. Next week is the week of holiday, right? As I always tell you guys, Monday, Fridays are normally notorious for being low volume days, okay? And then you have to give those days an upside bias, including days before and days after, day after holidays. And next weekend is a holiday, not this weekend, but the week next weekend is actually a holiday weekend. Therefore, the volume is going to start decreasing, or should start decreasing on a normal basis. Now that could potentially mean that because we've been having such low volume this week, that next week the volume could potentially start picking up, as people could potentially start selling. But again, normal in a normal cases, not 100% of the time, obviously, but I would say 80 to 90% of the time, people, the volume will decrease as it gets closer to a holiday, and then after the holiday, maybe 1 or 2, you have the days where people are just recovering, getting back into it, and then they start working again. And so it won't be till maybe next week Wednesday where we actually see the volume start coming back in which case should be already in the beginning of September, in which case I think the volume should start picking up, and then the market could potentially start coming back down. So that does make sense. I mean, if we go back into this this 143.29 level, and this upper trend line here, this could be the September area, the beginning or the end of August, and then we should get some more volume, in which case we could get a pullback. Now, I've been saying, I think it was back here, that there was a potential we could break down from this bottom trend line here. We didn't get that. I thought we were going to break down from this trend line here, but we didn't get a confirmation close below this candle here, so as you guys can see in my previous video. So I'm just waiting for this bottom trend line to break. But again, I am very cautious on volume. Again, volume is very important in my opinion. Volume validates price, and right now this price is not being validated. So yeah, I mean this is just a pullback. We got already that bounce off the 20 moving average. Sure, there is a potential we could continue lower, but as it is now without that volume, I don't see that happening unless of course there's a caveat, which we get some crazy news out of Europe or whatnot. But unless that happens, we stay low. The volume stays low, and then we continue to float higher. Okay. All right, let's talk about the levels real quick. We got this 141.36. It actually pierced right through it after the bounce off the 20 moving average. This was a pretty good reversal candle. Again, this was on a Friday, so Friday is notoriously low, known for low volume, and this is obviously federal manipulation or stock market manipulation, which is fine. I mean, again, that's expected, and I wouldn't have made the trade on this 20 moving average, but maybe I could have stopped out of my short position, which I took on this candle here, which would have made me money. I was already in the money here, but I thought the volume was gonna maybe kick back in, but I should have known that Friday it wouldn't have. So I'm still short. Just to let you guys know, I'm still short the SPY from the high of this candle here. All right, so we went right into this 141.88 level over here. The actual high of this candle was 141.83, so I was about 5 cents off before we got a intraday pullback. Let's take a look at the intraday. Now on the intraday, I mean, these trend lines and technical analysis, they work for all time frames, okay? Actually, we can get it from here. No, that's probably not good. All we gotta do is connect the dots here, which is pivot points in this case. And what we have here is we have a pivot point here, a pivot point here, and a pivot point here. All right. We also have a pivot point here, and we have a pivot point here. So basically, we're trading bullishly all the way up here, right? Let me just get rid of this upper line here so it's not as confusing. And then we come down, we break down from this bottom trend line. We come back up, we retest it, come back down, and that's normal. Normally, when you come back up to retest, that's when you would initiate shorts, okay? And that's because it's normal for a market ETF or stock, I should say, just stock or ETF, to backtest their trend lines. They come back down and they come back up again, and sure enough, they back test their trend line and then come back down, and most people would short. It created this nice beautiful bear flag over here, right? And then it came all the way down and it continued down, and now we're very not very low, but still on the bottom of that trend line. Alright, so now I can draw another trend line where we have the pivot here, we have a pivot here, and then a pivot there. I can just draw a trend line straight down. Whoops, that's not a trend line straight down. Sorry about that. We have a pivot there, and then a pivot here. Okay, so we have a pivot here, right? And we also have a pivot down here. See that? So it's pretty cool how trend lines work, where it's almost like you can determine what the market's gonna do. Right here we have a breakout of the trend line. We back test, right? We retest this trend line again, and then we pop higher, right? Now let's look at the mathematically calculated levels where we had this 141.36. This is on Friday now. Went right into the 141.36, so we closed at 141.36. Wow, to the penny. So if you look up here where there's the C, it says closed at this candle. Whoops. At 141.36, and then we got an intraday pullback. So this would have been a nice day trade before breaking out again. We retest the 141.36 again, come back down, retest it again, come up, come back down, and obviously retest it again before we get probably a 1 minute not bounce off of this level here. Okay. So now we need to quickly talk about the dollar. This is the dollar futures. Okay. I still have this level at $80.61. We haven't gotten there yet, so keep in mind that there is still a possibility that before we get a significant bounce, in my opinion, this $80.61 level is a mathematically calculated level. And as you guys all know, this is these levels have been working out pretty well. It doesn't work all the time, especially in low volume and earnings, but they are pretty close. So looking at this upper trend line here, this going straight across, this trend line has been working out pretty well. We actually broke down, went back up to retest it, went back up, and if I extend it here, it retested it again, okay, on this candle here before breaking down. Now we find support here at this pivot point here, but we didn't quite make it there, you see. So I don't see any supporting evidence that we should get a bounce on the dollar, but we actually did, right? We got a bounce off the dollar, but how long is this going to live for, right? This bounce was based on low volume. You see how low this volume is? So I can't really trust this bounce. So there is a possibility that we still hit this $80.61 level before we get a bounce. So just keep in mind that the dollar is inverse to the market. So if the dollar continues lower, then the market should continue higher. And if we do get a bounce here at this level here, then there's a possibility that the markets may drop after that. Let me see if there's any type of fib levels here. Let me just grab a whoops. Let's grab the pivot here, go all the way up, and there you go. There you have it. A 382 level, the mathematically calculated level, and we have the 200 moving average there, plus this pivot point here. So I'd say that this is pretty good support if the dollar actually gets there, but it really makes a difference on the Fed manipulation. We obviously all know that there is manipulation here in the markets, and what they normally do is if they want to prop the markets higher, they sell the dollar, right? Or they print money, and that devalues the dollar, in which case the markets will get a bump in price, okay? Alright, this is real quick the chart of the UUP. Now this is the cool part, right? The UUP, we get a bounce and we get a reversal candle here right on the 200 moving average. If I draw a line straight across this, this is actually a gap fill area here. So on the UUP versus the US dollar, versus the US dollar futures, we actually do find technical support here, in which case we do get a bounce. So it doesn't align, the technical analysis does not align with the US dollar futures, even though UUP is also the US dollar, just priced differently. It doesn't mean that we couldn't go lower, possibly down to here, right? So just keep that in mind, that the price movements of the UUP is a lot less than the US dollar futures. Therefore, when the futures ever hit that mathematically calculated level, then this stock here, or this UUP here, may actually come down here to retest, not retest, but to come down to its bottom trend line before getting a pop higher. Just want to make note, I said that these mathematical calculated levels work pretty well, and they do. However, they're not perfect, like in the case of BAC. BAC had a level of $8.13. What happened was we actually got a bounce off here on the intraday. Let's take a quick look in the intraday. This was about 4 days ago. So let's look at the 10-minute chart here. So we got 1, 2, 3, 4. So actually we did go into this $8.13 level with the high of $8.12, so it was 1 cent off before getting a significant intraday pullback. And again, once these levels are used, I can't trust them anymore. So we broke out of this level, consolidated sideways, come down, we bounced off this level again, we retested this trend line. The low of this candle here was $8.13, so this was to the penny. Went back up, came back down. The low was $8.12, so we missed it by a cent. Came back up, came back down, broke through it, and then broke through it again, and then came back down and bounced off it again. So this $8.13 level was a good level. It's just it was a good level for the intraday. So a lot of times what I do is, when I make a trade, if this had gotten to the $18.13 level, I probably would have shorted BAC. I didn't actually trade BAC. I just wanted to let you guys know that. But once I'm in the money here, right, I'm already putting in a break-even stop. So in case it goes against me like it did here, then I stop out break-even, no big deal, no stress off my back. The stock comes back up. I no longer use this level except until when it hits here, right? And then I will go long this stock at $8.13 because that's when it hit $8.13. So it came up, I would already put a break-even stop, came back down, would have stopped me out for break-even. No sweat off my back because I didn't lose any money, but it was just an intraday trade. Now if this was a day trade, then I would have gotten out anyway. But if I saw this as a swing trade, I would have been stopped out as break even. Not a big deal. I wouldn't have trusted this one because this one had already hit. I wouldn't have trusted this one already. Okay, so after this one hit, came back down, I would not have made a trade here because it's already been used and abused. Came back down, broke through it, come back up, and then I may possibly have taken a trade here simply because we already broke down, resetting this level here, came back up and then came into this level here, which was the low was $8.12, again 1 cent off before getting a pop higher, and that would have been an intraday trade. Therefore right now I would have been still in the long trade of BAC with a break-even stop. But again, I didn't take a trade. I just wanted to show you how these levels sometimes potentially work intraday or swing trade. I can never tell, therefore you always got to put your break-even stops. In my opinion, that's what I do once you're in the money. Okay, last but not least, I wanted to talk about the GOD. The GOD, I had these two levels here, and again, the volume is so low that not even my calculated levels are holding up to the penny like it normally does, right? We all see since December, these mathematically calculated levels were holding up, and they do hold up pretty well. But in a case where we just have weeks and weeks of low volume, it just it has a bit of some difficulty. Now what happens is, and I guess I can consider it that if it's low volume, it'll hold up for the intraday, in which case it did on this candle here. But once we get volume back in the markets, then I think it has a good potential of working as a swing trade versus just a day trade. Now on on gold, I had these two mathematically calculated levels here. Obviously I had patience before shorting gold. I didn't short gold yet, just because I do have this level here, which is 166.86. I don't think it's going to get there though, to be honest. I still think this level here holds up in regard to, it didn't hold up to the penny, but I think it has a potential of reversing over. Why? Because look at the volume. The volume was just, I mean, crazy high. Okay, so to me, with this volume, if this candle here was some sort of reversal candle, so say the candle had a little bit more of a tail there, and that was a shooting star, or maybe the candle looked like this one here, a doji candle, then I probably would have taken a short trade on gold. It is still a good trade in my opinion to short gold right now, but again, without the volume, I can't justify it. So if somehow, even though in the low volume, we get up to this 166.86, I will be taking a short on the GLD. Okay. So I'm already into 31 minutes, so this is your 31-minute market update. Thank you very much. I just wanted to again stress in every video how much I appreciate you guys stopping by to take out your time to watch my videos. And if you like these videos, please hit the like button. I mean, it's not like I make any money, but I just want to see if you guys like it or not. If you guys also have any other suggestions of how I should change it up or whatever, just feel free to shoot me an email or something. But in any case, God bless to you all. Good luck to your trading, and I hope to see you in the next video.